Thanks. You have your mic already? Sir?
As you want.
It's as you want, but great. Hello, everybody. I'm Xavier Lages from Ditos in Mauritius. I'm very happy to chair this panel on fintech investment opportunities beyond the payment solution. This panel will end 45 minutes, and I'm very happy to introduce Patrick Gutman, who is the Managing Director for MFS Africa and who will be moderating this panel. Patrick is the Managing Director with MFS and oversees the Group UK's and European entities and activities, in addition to managing one of the business units within the group, which houses a number of core enterprise-wide functions. In addition, Patrick also oversees the engagement with a number of key segments, such as banks, non-financial institutions, government, and development organizations. Prior to joining MFS, Patrick was the CEO of UBA UK, and prior to that, he was Managing Director, Corporate and Institutional Banking at BACB. Patrick spent many years on the African countries with Ecobank and Commercial International Bank in Egypt. And Patrick began his career with Wells Fargo and then ABN AMRO, with whom he was based in the US, Europe, and several years across Asia. Patrick is a seasoned international executive with a diverse background and experience in managing cross-cultural teams across a variety of geographies. Patrick holds an MBA from Northwestern University, and he'll be chairing this session today. Thank you very much. The floor is yours, and I'll let you introduce the panelists. Thank you very much.
Thank you very much. Good morning and welcome, everyone. It's a pleasure to be here and look forward to this discussion. I will allow the panelists to do a quick introduction of themselves rather than me reading through each one of their bios. But just to put context, we're clearly talking about investing in fintech, and in particular, moving away from the sort of the hot topic of investing in payments fintech, which obviously has dominated much of the investment landscape on the African continent. So today we'll explore some areas beyond payments. But let me, before we get into the discussion, let me allow the panel. We have a big panel, and we only have 45 minutes, so we need to try to get through this quite quickly. I will start the far left with Hussam. If you can introduce yourself and tell us a little bit about what you do, and then we'll come this way.
Sure. Thank you, Patrick. So my name is Hussam Abu Musa. I'm a partner at a private equity firm called AFSIC Partners. And what we do is we are specialized investors that invest exclusively in financial services, fintech, and financial services infrastructure. We mainly provide growth capital to basically establish businesses and management teams to help them grow the business within the space. We are present in a number of markets. We invest extensively in Africa, where we invested in the southeast, west, and north, and we'll use some of the examples we invested in when we talk about the evolution of the sector around the payment space. But we also have strong presence in South Asia, particularly India and Southeast Asia.
Hi there, this is Enrique. I manage the fintech investments at Speed Invest into emerging markets. We are an early stage VC fund based out of Vienna, Austria. We have offices all over Europe though. We look into fintech from a global perspective. We look into the different trends that happen in fintech. From a geographical perspective, we understand that each of the regions is in a different phase when it comes to the development of fintech. And we've been investing into early stage startups for the last 10 years, and 5 of those in the African continent.
Okay. Very good. Yeah. So I'm Obi Emetaram. I'm a co-founder of AppZone. AppZone, we classify ourselves as a fintech infrastructure provider, currently focused on building out payment infrastructure on blockchain that enables connecting commercial banks and fintechs for payment flows, while also allowing digital currencies to be issued on the same network. Before now, I built out a banking as a service platform on the cloud that is more or less market leading in Nigeria today, with a few clients in a few other countries like Gambia, Ghana, Kenya, Tanzania, and so on. We're basically running back office and digital front ends for small, medium retail financial institutions, including MFIs, fintechs, and some commercial banks as well. Yeah.
Thank you. Good morning. My name is Artem. I'm representing Aza Finance. It's a fintech company that was founded in Nairobi 9 years ago. We're dealing with blockchain and crypto back then to help intra-Africa inbound and outbound flows for businesses from Africa and from the globe. Right now, we're a global fintech with offices all across the globe, 5 offices in Africa. We're doing last mile payment, FX, treasury and liquidity for companies into exotic currencies of Africa. We have infrastructure in Africa to enable businesses to trade and to expand not only in Africa, but globally. And definitely we'll share also experience how we made several acquisitions of fintech in Africa and across the globe. Thank you.
Hi, my name is Tim. I'm a founder at Finclusion. We're doing productive loans across multiple countries in Africa, currently in Kenya, Tanzania, and South Africa. In doing credit, we work with partners, so we distribute through both employers and merchants to maximize our distribution and limit customer acquisition costs. We've been doing this for the past couple of years, and I think really seeing the growth coming through post-COVID during 2022 going forward. Thank you.
Okay, my name is Yves Eonet. I'm the chairman and co-founder of Skelit. Skelit is a company that is active in more than 35 countries now. We have designed the next generation core banking system. We deliver to banks all the tools to become more digital and more agile and efficient. I'm sure we will address what we do with those new technology connected to fintech. But what is interesting is that we've been working with Africa for many years. And for the last 3 or 4 years, we've been bringing back our technology to Europe because we're convinced that the future of banking is being built in Africa today with all those open architecture, real-time, easy to use, extremely secure solutions that includes fintech and creates ecosystem. So we'll speak about that.
Excellent. Thank you all very much. I guess my first comment before I throw it out to the panel is I think we probably reached, and I'm fortunate enough that I have the microphone at the moment, so I guess I can share a little bit about my thoughts. I think the term fintech is probably one that we need to migrate away from. I'm not quite sure of any business that is no longer sort of technology dependent or driven. And I think many businesses by their very nature are in one way or another in sort of financial services. So I think it's probably too broad. Clearly, particularly if we look in emerging markets, and particularly if the focus is on the African continent, a lot of fintech investment and focus has naturally been on the payment space. And the panel today is really exploring and I guess pulling back the layers to see what are some of the other sectors within sort of financial services / technology company startups that are seeing and attracting capital flows. So I guess I wanted to open it up to the panel. Any panelist can pick this up. But what are some segments outside of the traditional sort of payments businesses that are now starting to attract the attention of particularly those of you who are in the sort of the investing space. Who wants to go first?
I guess it will have to be one of the investors.
Happy to go first.
Yeah.
I would say payments is key in order to make sure that other ecosystems within the fintech world can exist. Without payments, it's more difficult to do collections for lending. Without payments, it's difficult to, I don't know, to do any type of bigger transaction. Without payments, you cannot do any BNPL. So first and foremost, it's very important for any ecosystem, regardless if it's in South America, in South Asia, in Africa, that the payments rails work. We're at the very beginning of that. Very, very beginning. In the next couple of years, what we expect is that the payment ecosystem will continue to grow, but more and more adjacent spaces will be born. Thinking about eKYC, I'm thinking about other lending, be it SME lending, corporate lending, also consumer lending. I'm thinking about interoperability between payments types. I'm thinking about interoperability between mobile money and the banking industry. So there's a wide variety of new fintech subsectors that are being born and will be born in the next couple of years. But the enabler of all that, I think we cannot fool ourselves, is at the end of the day payments. So I agree, yes, there's many more sectors, but payments is a catalyzer of all of those at the end of the day.
Hussam?
Well, look, it's not only I agree, I think this is half of what I was going to say anyway, so thank you. But basically, look, I think it's, when we think of financial services, we rarely use the term fintech. I think it's overused because fintech is using technology in the financial services space. Okay, during your time at CIB, when we overlapped, we were using technology to offer financial services more than 10 years ago in a bank environment. So fintech is a term that I think I agree, it's becoming overused, obsolete, and we don't use it. We think of it as financial services infrastructure, and we think of it as provision of financial services as products. And the evolution of this what's happening next, what we're seeing, is the businesses that are enabling financial services, which what we call the enablers. So if we take a step back, we think of financial services as a sector to first think of it as verticals. These verticals are payments, lending, capital markets, insurance, and we've been investing across these verticals. Payments is the biggest because it's the biggest revenue pool, and it cuts across all these verticals, exactly as you mentioned, because you cannot lend if you cannot collect, which is a payment transaction. What we see happening next is basically, we like to use the statement of every company will become a financial services company or a fintech company because it will provide financial services somehow. And that's the role of the enablers, and that's what's coming next, I think, in this space, or what we believe in the space, where these are the businesses that will enable any company in the KYC space, for example, or in the wellness space, a healthcare provider, to be able to use the data and the customer ownership of the customers to offer a digital wallet or to offer a lending service. So we think this theme of enablement is quite a big theme. And the theme, so that's the first bucket. The second bucket is basically how these verticals are merging together. And we see a lot of businesses that pivoted around the customer or own a customer because they offer a service like lending, but they started offering payment services. So we'll see more of these kind of ownership of an ecosystem, the rise of super apps. So for example, our business in Egypt, M&T Haaland, which started as a consumer lender, that went from becoming less digital to becoming super digital. Now it's one of the big two super apps in the country. And basically through the super app, you can pay your bills, you can book events, you can pay your loans, you can apply for a loan, there is an e-commerce platform, and it becomes a whole ecosystem around the consumer. So I think it'll be good to hear the colleagues' view, but I think the kind of like the final point is embedded finance, and that's maybe we can touch base on it after hearing some views from the panel.
Bobby? Yeah.
Yeah, so even though, like you said, the word fintech is, just overused, and I also started quite early when we were doing banking and payment solutions, and there was no term like fintech, right, at that time. So, but I'll still borrow it to kind of create two categories, the way we look at it, where we look at like fintech 1.0 and fintech 2.0, where fintech 1.0 essentially is your traditional centralized type of digital financial services. And we'll group fintech 2.0 as your decentralized fintech or decentralized digital financial services. And the difference, the broad difference between both of them is in 1.0, which is centralized, it's basically based on fiat money. So the type of fiat currency we use today powers all of the types of services, in that category. While for what we see as 2.0, it's based on digital currencies. Initially, altcoins and stable coins, but what's interesting is that it's going to be based on central bank digital currencies. So CBDCs are going to play a huge role in 2.0. So I'll talk about specific areas that we see. I don't know about where investments are today, but I'll talk about where we see specific cases in both, where we see opportunities for investment. In 1.0, FinTech 1.0, I think very specifically, I'll start with something that Hossam mentioned now, which is embedded finance. So the idea around embedded finance, where there's a captive base of customers who are doing some kind of activity based on technology. So there's visibility into flows and other type of blocking that allow rendering services to be quite similar. So it could be, for example, an agent network, the technology providing agent service. So infusing lending into that. It could be infusing lending into the technology providing inventory and the sales points for merchants, for example, and similar types of stuff. So that's one. The other area, and why that is lucrative is because the nature of the way the technology is blended with the services, it de-risks things like lending and all of that. The other interesting area is in investment. So platforms that enable retail-level access to foreign investment. So whether commodities or stocks and so on. That is a huge opportunity, especially in African countries, because a lot of the population want to hedge against currency issues. I can tell you in Nigeria, for example, a lot of the lower-level investors, retail-level investors, are happy to put money in investments that will be dollar-based to hedge against. So there's a huge opportunity and a number of fintech startups coming up there. The other area is, like Usa mentioned as well, the enablers. So a lot of investors sort of overlook that enabler layer, which is those that provide the lending platforms, for example, or the banking platforms, and the kind of rails to power these fintech companies and allow them to do all the interesting stuff they can do. So these are really specific on fintech 1.0. On the 2.0, I'll just talk briefly because this is new stuff. And a lot of regulation is not yet in place, but we see it's going to be disruptive because digital currencies are non-custodial. That's the issue. So fiat money requires banks to keep it in a vault, which means that the financial products will be rendered are kind of locked in silos into those institutions that hold the money. Now, digital currencies are different. They're not custodial, so they can sit on a blockchain, and any organization that can write smart contracts can build financial products to deliver services to customers without being like a traditional financial institution. This is DeFi. This is called decentralized finance. So we expect to see a merger between DeFi and CBDCs, right? Because the huge issue with DeFi and some of the other digital currencies is that they're not regulated and they're frowned upon by a lot of regulators. I know that in Nigeria, for example, they are banned. But we're seeing a lot of central banks experimenting heavily with central bank digital currencies that are also, even though they are not like the traditional crypto, they're also non-custodial, right?
So I think we'll come back and we'll touch a bit on the regulatory landscape because it obviously is an important one. But before we do that, Artem, your views on...
I would like to add that, for any fintech to be successful in Africa, and in cross-border Africa, it's a huge market, 1.3 billion people, as mentioned before. Definitely the most important layer is infrastructure. And I'm not only talking about payment infrastructure, but also regulation infrastructure and exposure to the currencies. So, if you take North America and a fintech or any other startup there, you have the market, you have the regulation, you have the rails, everything is good. You come to Europe, you have the regulation, you have pretty much one huge market, but you have a lot of different target audience, around Europe. And then you come to Africa, and more than 50 major countries, currencies, different regulation, different infrastructure. So for a fintech, and I'm a representative of fintech from Africa, I would say that until a fintech can rely on very good infrastructure in terms of payments, in terms of exposure to currencies and exposure to regulation, it cannot be successful. So that's why Paytech is #1 fintechs from Africa, Then it opens up the way for other fintechs to come to the market, and that's need to be understood. Thank you.
Tim, any thoughts?
So I think, I fully sign up to most of that. I think we've seen obviously great developments, and I think, we've seen that markets where, the payments have been more established, whether it's in Nigeria through, the prevalence of an interswitch, or obviously in Kenya through Safaricom, there's been a real growth in lending tech that hasn't been fully replicated in other markets. But I think it's that journey has set in and will evolve over time. I think the one interesting component on other fintech angles versus payment tech is that in some of the markets you see payments margins coming down over time, getting under pressure just because it's becoming a commodity and there is too much competition. So for example, direct EFT pricing in South Africa has dropped materially over the last couple of years. We see the same on card transactions and other payment transactions. So I think for a lot of fintechs, even for the payment fintechs, a move towards value-added services will actually become far more important to really drive earnings. And then looking how they pair with embedded finance, etc. So I think it's going to be interesting to see who's going to be best positioned to deliver both on the infrastructure, but also on everything that comes on top of it and gets facilitated with that, as margins come down.
And on our side, when we install a bank in Africa, of course, since we have an open architecture, we are connecting to many various fintechs. And I would add to everything that was said that we have a lot of fintech that are more tech than fin. I mean, they are very technology, such as strong authentication, scoring, instant scoring, all those technologies that can be connected to those digital platforms and that can provide to our customers a very, I would say, advanced and evolutive service. Of course, that includes all the security mechanism and security technology that can be added, and all those initiatives and technology should be definitely good investment for you guys.
How, if we explore the theme of sort of diversification a bit more, because I think it's safe to say that a few years ago, fairly monolithic payment companies could raise significant money. Obviously, the investment climate has changed quite dramatically, especially recently. How important is this, and I'm asking you who are investors here, how important is it for fintechs to sort of show diversification in the services that they offer, or at least a path towards not being too narrowly focused? Is that something that is now coming to the forefront? Who wants to? Enrique, any thoughts?
Investor side?
I think here again, Hassan's view and my view are going to be a bit different because it's late stage versus early stages. I think when it comes to early stages, it's okay to be relatively broad when it comes to your approach. You're still figuring things out. You still don't know who exactly your customer will be. You don't actually know what your USP will be versus incumbents. So it's a different type of investing what we're doing. Having said that, I think what has changed in the overall climate is that right now money is scarce. So you need to make sure that for every dollar you spend on anything, you get at least $1 back. So unit economics, which is this buzzword that venture capitalists love to use, is more important than ever. And I think that if I could take something out of this situation, is that unit economics are right now #1 priority, and obviously focus will evolve throughout the life cycle of the fintech company.
So definitely we agree on the latter point. And I think what's going on is a positive evolution to how the market is evolving, where entrepreneurs, founders, and managers are articulating the business thesis better. So it's resulting into more and deeper articulation of how we will make money, now or later. But this has to be kind of part of the thesis, which wasn't there. But to answer your question, I think, yes, we might differ a bit in terms of how broad or narrow. It's fine to be broad if you're good at it. Yeah. So basically, if you think of the financial services space and we break it into, I think, especially in Africa, there'll be the core verticals, the traditional verticals of lending, payments, so on and so forth. These will continue, and there will be champions within the verticals and champions cutting across the verticals. So the example I used in Egypt, M&T Halan, started in lending, cutting across into payments and other services. The other business, kind of I look after in Egypt, Fowry, started in payments, now it's offering lending. So there will be this kind of like offering a number of financial services across the verticals, but it's based on a strategic moat and a differentiation element and customer ownership to be able to reach the customer and offer these services in a differentiated manner. The second bucket will be the embedded finance, which I think out of these new themes, it's the one theme that is strongly coming out from this panel. And as Obi mentioned, what is embedded finance? In a simple way, it's a business that was designed to offer a service or to capture a sector that is not financial services, but is monetizing through financial services. So there'll be businesses emerging in this embedded finance space, and businesses offering services to these embedded finance space, such as kind of like offering the credit part or the payments part. So for example, Greenlight Planet, GLP, our portfolio company that started as offering solar power electricity solutions. This is not a financial services business, if you think of it. We thought of it as a financial services business because it's offering a product, it's operating in a space in a differentiated manner, and through this customer reach and ownership, it started offering financing to be able to finance buying these units through subscription or through payment over installments, and substantial part of the revenue is now coming out of this financial services service. It is an embedded finance space.
Any further thoughts on, particularly on this point of an embedded finance? Artem, anything from you?
Not the investor side, We just can share that my colleague shared that, you need to be careful in terms of investment. I think differently, because in Africa, it's a wild market, and, we had several acquisitions of other companies on the market, and later on we understood that after those, the same companies, MasterCard and Visa, went after. So, we definitely made the right choice, and it helped us to do the exposure and the growth to the next level, because as mentioned, Africa is a majority of different markets with different regulatory, and the more acquisition you make in terms of different markets, the stronger you become in terms of cross-border, in terms of knowledge and expertise on the market. And that can make you more valuable for investors in the end, because working only on one market doesn't make you successful in Africa.
How important is multiple markets?
I think from our perspective, I think it's important, maybe not early on, but eventually, especially with most of the markets in Africa, because there is a significant amount of geographical risk where you basically can ensure that you can, hedge your exposure, grow in multiple markets. I think early stage, there's no benefit in flag planting and doing nothing, right? You should be in multiple markets, but be there, have an operation, actually trade and have customers. From our perspective, we do look at, where we believe we can drive synergies by looking at markets that have, similar characteristics, because some markets are more alike each other than others. But there's always replicable pieces that can be replicated across markets. And I think scaling, for example, credit in Africa from time to time can be difficult because you're relying on affordability. Unlike payments where the transaction is done, you've made your revenue, lending, it's really all about collecting. If you don't get the money back, then no matter how much money you lend, you're really just digging a big hole. So scaling across multiple geographies can be an efficient way to actually scale a very big platform by having reasonably sized, but in absolute dollar amounts, smaller platform in each of the markets. And I think specifically in in businesses that will scale to be very big in each market over time, but are not yet there, it's also a way to get to critical scale, which I think, especially on the later stage, is more and more important, that the value of the business and the value of the opportunity is large enough to warrant significant checks of investment that tie up with the current investment climate of, I think, what one needs to fulfill.
Yeah, so I think the other thing with the diverse markets, especially geographical, is around hedging risk, currency exchange rate risk. Particularly in countries where you have a lot of fluctuation or, devaluation in currency, because, of course, investors come in and the exit is based on revenue in dollars. So you find companies who are growing, but they're growing in revenue, but the valuation is not growing as expected because the value of the currency is going down. The hedging against that is easy when there are multiple geographical markets where billing can happen, especially if it's services where revenues can be earned in dollars instead, so that the valuation stays or grows, commensurately with the revenue. So that's one. On the issue of diversifying across products, what we've seen in our experience is the VCs, especially for early stage, prefer a more narrow focus. That's our experience. If prefer a narrow focus, and then in our experience with private equity, if there are synergies, between the products, the private equity are happy to hedge their bets against, so more like a sort of diversification play amongst the PE. This is in our own experience because we ran a similar sort of diverse portfolio of products. So that's really our experience. And we kept getting from the more VC investors that, look, you need to be more focused. You're too early stage to be as diverse. But then PE guys were like, look, we like the fact that you have a mature existing business with potential upside in a newer early stage businesses. So they felt these things complement. So those are like different views we've experienced from investor point of view.
Thank you. Yves?
Yeah, I wanted to complete what was said. With our point of view as a technology provider, we see a big benefit in multi-country operation, not just on the security side, but also on the cross-fertilization. People, a lot of countries are more dynamic than others, or banks have more experience in one field than the others, and we gather all our customers together on a regular basis in order for them to share the way they use the technology. And by doing that, we capitalize on each other, and it gives a big dynamism to these digital banks that we're building. And on the embedded finance that you asked earlier, we saw some very interesting things in Africa. We saw some banks that were connecting our platform to fertilizer providers, and they were providing bags of fertilizer to farmers, and all the payment and all the loans were taken care of by the back office. And the guy just saw, bags of fertilizer arriving to his field. That's one example. We had another example with fishermen. I mean, all those ideas of making everybody a fintech, meaning every company has a need for finance. And when you have the right platform with the right digital interface, you can connect easily to the bank, and the bank can offer extremely personalized and vertical services. That is really very important. And this is why I see that Africa is showing the way, because we need that all over the world. You know, I mean, we're going from a world where we have one bank for everybody. Now we need a bank for each of us. And this is all technology behind.
Excellent. Let me see if are there any questions for the panelists out on the floor. Anyone want to throw out a question? Ideally, a really challenging one for one of the panelists. None. Then maybe let's turn our attention, and Obi, you touched on it, because I think it's an important trend, and I think in many ways the emerging markets are sort of leading the way, and that's around this whole crypto sort of digital currency space, which can be dissected in multiple ways, right? On the one hand, people are talking about it as an asset class, an investment sort of class. On the other hand, we also know it provides an underlying payments infrastructure, so sort of back to payments again. Any thoughts or comments on that, and also with a sort of regulatory lens? How will that shape the landscape over the next, say, 5 years or so? Any thoughts?
Yeah, so happy to chip in here. And you're absolutely right. There's the two types of digital assets, basically those seen as securities, which are pretty much volatile the same way shares be volatile. They're not usually backed by anything, any physical asset. And then you have the digital assets that form a basis for payment, more like currency. Those are the stable coins, and we have them in the CBDCs now. The trend we expect to see is that, like I said, central bank digital currencies will be very, very pervasive in this new world of digital assets. That's one. The other thing is that from a regulation standpoint, we expect to see the sort of security-based digital assets, which are like the altcoins, regulated more by SEC and the likes of SEC-type regulators, while the stablecoin types of digital assets regulated a lot more by the central banks. There's key issues that need to be resolved. KYC, big issue. AML, big issue. Exchange controls. And for stablecoins, the ability to enforce that assets actually back these digital tokens. There's early thoughts around how to do that. We know that a lot of regulators are not yet very far gone. What we see is very early experimental ideas that different parties are now originating to commence the conversation with regulators about how to get this done. But in the next 5 years, definitely, we will have properly regulated space for digital assets.
Any other thoughts on this?
Yeah, maybe from our side, how we view this current market. Obviously, we're early stage investors, so it's different than any other type of stakeholder here. But you need a lot of infrastructure in order to make crypto work, and you need the regulator to play along with you. These are two key things, and at the moment, it is not ideal, and it's also very fragmented across the continent. So with infrastructure, I mean, you need on and off ramp functionalities, not someone that gives you liquidity whenever you want to exchange any crypto for local currency or for dollars. You need, as you mentioned, KYC, AML. You need to be able to route the payments and make sure, okay, this is actually legit. And you need different payment gateways that are a bit different than the normal gateways whenever you're doing transactions from outside the crypto ecosystem into the ecosystem. And at the end of the day, you need a government or a central bank that is okay with this. And some of them are not. So we are still a bit far away, but I think crypto is a thing that will come for sure. We've seen it in every market out there. So the question is when, how, and in which shape or form.
Hussam, any thoughts?
Yeah.
Yes.
Which country?
Well, I know that maybe not regulatory, but in terms of experimenting, Nigeria is one of the first countries to issue a digital central bank digital currency, the e-Naira. So the country is ahead in that sense. I also know that the Securities and Exchange Commission has put out guidelines as regulations for the sort of security-based assets. So there's some progress there. Yeah, I can speak for that, but generally, not a lot of progress has been made, yes, in terms of regulation. What we have is some regulators more open-ended, and some regulators very, very closed to the idea. Saying, look, don't touch this. This is not allowed. And some are like, well, deal at your own peril. That's really what we're seeing.
I see one more question. Yes.
Yeah. My question goes to the investors, to them. What proportion do you think is between payment systems involved companies and other fintech companies, like as the topic says, beyond the payment systems? Which is the proportion of investments made so far in the fintech landscape, and which do you think would be the trends in the coming years? Thank you.
So I think the question is, what's the proportion of payments versus non-payments in any portfolio? I think it's not like a preset. It's not a preset formula or allocation. I think there are a couple of points here. Number one, payments will remain as a vertical, and it will evolve. So definitely in any portfolio of an investor specialized in financial services, there will be payments and the evolution of the payments businesses. And there's a whole topic of what's the evolution of payments business. But the second point is, so what is a payment business? Is a bank a payment business? Is a lending business collecting payments or facilitating payments a payments business? Or is it, for example, a healthcare business that is offering a wallet on its healthcare platform that allows the consumers to actually pay their bills, and it sells insurance on this app? Is this the insurance tech business? Is the healthcare business? And that's the heart of the embedded finance and how these verticals are coming together. So I think the question of what's the percentage of payments businesses, no one knows. But I think payments will remain, and the other verticals will also grow, and then the enablers will become the new growth area. That's how we see it.
And that, yes, brings us to the very end.
It's kind of like perfectly timed.
Perfect, yes, indeed. So thank you all very much. Thank you for the questions, and enjoy the rest of the conference. Thank you very much.
Thank you.
Thank you. So that's when will be next step?
I'm going